Hey, what's up, Bitcoin Chaser fans, and welcome back to another crypto news live at 5 with myself, BroKaine, and Bitcoin Chaser. And before we even begin, happy birthday to Bitcoin holders. It is Bitcoin's 10th birthday today. So Bitcoin today is 10 years old. The first white paper was released today. So that's some really cool information to jump off onto into this video. But as we're going to do, we're going to be talking about a few things today. It's going to be rather short. We're talking about the updated changes to CoinMarketCap. We're taking a look at an article that says financial sector running out of fuel can propel Bitcoin. Kyber network launches Wrap Bitcoin or WBTC. What is proof of stake? And top cryptocurrency sportsbooks, as well as Revain releases a full-scale version 1.0 of the Revain platform. Additionally, we have a segment from Son of a Chain talking about blockchain anonymity, democratization of data, and freedom of speech. So that's going to be very interesting. We're taking a look at that third. But right off the bat, let's check what the markets are doing today. As we can see over the last 7 days, that recently, about 3 days ago, we did see a substantial drop in the markets. However, we are expecting it to return back up. Bitcoin is now at $6,323, down 0.21% in the last 24 hours. Ethereum is at $196, down 0.34% in the last 24 hours. XRP at about 43 cents, down 1.35% in the last 24 hours. Bitcoin Cash now at $413, down 1% in the last 24 hours. EOS at $5, down 0.19% in the last 24 hours. Stellar is at 21 cents, down 2.52% in the last 24 hours, but the graph does look a little bit different than the top 5 market cap. It was more of a general downtrend than a sudden dive. Litecoin at about $48, down 1.69%, similar to that of the top 5 market cap. And Tether at finally above $1 by 1 cent. Strangest changes happening here. Up 1.39% in the last 24 hours. Now, my inclination is maybe there's something in correlation here between this price fall and this price rise, but that's just my own speculation there. Now, moving on to our first article, we've got traditional financial sector running out of fuel can propel Bitcoin. So if economic growth is lacking, then print some money, right? That was the prevalent axiom through which financial markets were lifted out of the mess they created for themselves with the help from governments after the 2008 to 09 meltdown. Quantitative easing was a euphemism for printing money to artificially boost the economy and bail out those who were too big to fail. The average person only got some breadcrumbs, and that was not lifted out of the precarious situation that casino-like behavior created and the bailouts perpetuated. Now markets are running out of steam after monetary easing gave way to excessive debt, and the latest artificial boost, the US corporate tax cut, seems to have run its course as well. The only thing that is real now is Bitcoin and other valuable assets that are actually scarce and cannot be created from thin air. And that's true, we cannot create Bitcoin from thin air, but we can print money, and there are certain people who actually make that decision. It's not a decision we can make ourselves. Dow Jones and other indices are down. Financial markets have been flattening recently. The Dow Jones index erased all its gains it made so far in 2018. TSX, for example, having its worst day in 3 years. And mainstream media and prudence are pointing the finger at rising interest rates, but they overlook the fact that after the hikes, interest rates are still near historical lows. However, Bitcoin, with a fraction of the market cap, has gone down from about 20,000 USD to around 6,500 USD, roughly in the same time frame. But the Bitcoin alternative, all the additional fiat money that was arbitragely put into the money supply, has probably run through cryptocurrency markets and has come out by now. As we know, a lot of people in the December time frame were very, very, very keen, right, to get a loan and throw it on Bitcoin. And now we're kind of seeing that money supply, that artificial money supply, sort of leaving Bitcoin by now. We're almost all out of it. Bitcoin and other altcoins do not depend on this cheap fiat money to grow. Traditional markets, on the other hand, seem to depend on cheap money, and they are just starting to deal with their addiction. In the meantime, the average person is handling more debt at every level while facing an inevitable financial market downfall. The last time financial markets fell, government and central banks bailed out banks and other institutions that were too big to fail, at the expense of the average person who had to take out more loans to make ends meet. Bitcoin didn't exist yet when the last economic meltdown came around. Now the average person has a choice to hedge themselves against the excesses of these markets. And that's very true. You know, when financial markets actually fall, so does everybody within it. Right? And Bitcoin is finally the only alternative to that problem. And that's actually very interesting, because I wonder what it would have been like back in 2008 and 2009 if Bitcoin was around. Would there be a correlation between the downwards price of fiat and the upwards price of Bitcoin? It's interesting to think about. Let me know what you think. So choose a system in which money supply is predictable. As financial markets falter with rising interest rates, one of the central causes of the next economic downturn was laid bare for all to see. Now that Bitcoin exists, it is indispensable to point out that this asset and the economy behind it is the exact opposite of what we are seeing in traditional markets at every level. Bitcoin's price, Bitcoin's price seems like it has bottomed out already, while the traditional market downturn looks like it's just started. These factors and the fact that coins cannot be created out of thin air, while fiat money can be created at the whim of the decision makers, it is what will propel Bitcoin when the financial sector runs out of fuel and the traditional economy falters again. Please do let me know what your thoughts are on that. Now we're going to jump into our son of a chain segment, which is talking about blockchain anonymity, democratization of data, and freedom of speech. Let's take a look at that.
Blockchain, anonymity, democratization of data, and freedom of speech. Last week I spoke about how Bitcoin affords us unprecedented financial freedom. Blockchain could do the same for a wider scale. Blockchain-based systems could safeguard freedom of speech, democratize access to data, and protect the identity of people online. The question is if blockchain technology can really be implemented beyond the narrow scope that Satoshi Nakamoto used it for when he created the first version of P2P electronic cash based on this technology. Leaving this question aside, theoretically speaking, a blockchain-based magazine, for instance, would be completely censorship-resistant, adding immutability to the mix. Freedom of speech on such a platform would be absolute. At the same time, access to information could be greatly democratized through blockchain-based networks, if they resemble Bitcoin's blockchain insofar as the principles of the network are concerned. Then everyone would have access to the data uploaded if they run a node or through a blockchain explorer. This would take power away from governments that censor free speech. It would also take power away from corporations that amass data and metadata for their own profit. Blockchain systems would in theory allow users to profit from the data they share instead of generating profits for corporations, which take advantage of people who don't understand the implications of sharing their personal data online. Due to these characteristics, blockchain-based networks would teach people not to upload what they do not want to share. The false perception of security that they now have when they use a strong password on their Facebook or Google accounts would completely go away, because they will understand that they will lose control over any type of data they upload immediately. The only piece missing in this puzzle is the adaptability of blockchain technology to other realms outside the transfer of value or money. Just the thought of this brave new internet ruled by blockchain-based systems could change people's perceptions nonetheless. So at least at a conceptual level, blockchain technology already red-pilled us.
Right, so that was the son of a chain segment, and some really interesting facts to take out of that is what he mentioned when he said blockchain systems would in theory allow users to profit from the data they share instead of generating profits for corporations, which take advantage of people who don't understand the implications of sharing their personal data online. And I feel that is something that people only recently figured out with Facebook and Instagram. Immediately as you share your personal data or your images on these platforms, you actually lose all rights to owning this information or data that you're sharing, as well as the ability of blockchain technology for other realms outside of the transfer of value or money. And we're seeing that more and more right now, where stuff like supply chain optimization or keeping records of really sensitive, private, and secure information in a way that can't be interfered with by a central entity and remains as the information it was stored at for all time. And that's some of the other applications we're seeing with blockchain technology. So please do let me know your thoughts on this week's Son of a Chain segment. Next, we're taking a look at Kyber Network, launched a new currency called Wrapped Bitcoin, or WBTC. So it goes to say, nothing spells Bitcoin like custodians holding BTC reserves to back the circulation of a token that represents Bitcoin prices on the Ethereum network. Kyber Network is turning what is supposed to be a P2P form of electronic cash into a derivative on a blockchain that requires inflationary digital asset to operate. So they're basically creating a coin that is they're creating a coin on Ethereum that is backed by the price of Bitcoin. Now that's interesting, right? So BTC to WBTC arbitrage. The interaction between BTC and WBTC will offer opportunities for arbitrage which not everyone will be able to take advantage of. There is absolutely no way to keep BTC prices and WBTC prices at the same level for several reasons. Number one being the asset will not be used for the same purpose. WBTC is supposed to be used as a proxy to trade BTC on decentralized exchanges and to use on smart contracts, which will yield varying levels of demand. Like we saw with Tether USDT, characteristics from assets that back other assets don't necessarily translate or create price differences. Anyone can wait and see how WBTC will work and then copy every single aspect of it to launch a different version of WBTC. With competition, WBTC prices might dip even lower, bringing about even more opportunities for arbitrage. And on that note, we've seen it as well with the USDT or USD Tether. Competition actually directly interacts with the current price and the stability of that price. So with more competition, if it is that easy to duplicate and create another coin with the same function, we could see a very different kind of final outcome. Transaction congestion on Ethereum could create temporary price gaps between BTC and WBTC, and it will take time for users to redeem their BTC when they cash in on their WBTC, which will create temporary price differences with Bitcoin well into the thousands. Small percentage changes on these prices can mean large profits for those who have the right information. So the question really is, can you trust Kyber Network and the DAO it is creating to launch WBTC? Well, Kyber Network is creating a DAO to manage the supply of WBTC. Exchange of WBTC for BTC and reserves, everyone will be able to verify this via both blockchains. So that kind of does make sense, but it all comes down to the code and the implementation. Even if the idea sounds like it can work in theory, the quality of both key variables remains to be seen. And that's 100% true. Until we actually see it, we have no idea how it is going to perform. And it is an iffy subject right now. And as well, we have Bitcoin on the blockchain, right? So going back into that infamous DAO, there are characteristics of Ethereum that many Bitcoin holders would like to avoid, like the plague, and for good reason. Ethereum is de facto not immutable. If the network could take the DAO debacle out through a fork and bail people out, it can do it again. Therefore, an asset such as WBTC will be worth less than BTC to those who appreciate immutability. And then we're going on to Ethereum's inherent weakness. It is a more complex network insofar as its goals go when compared to Bitcoin. Ethereum will require much more intervention and tweaking going forward. Knowing that smart contracts are likely to run better with an inflationary medium of exchange, for example, Ethereum is slated to transition into POS, which will be inflationary. Now, for those of you wondering what POS is basically proof of stake algorithms which achieve consensus by requiring users to stake an amount of their tokens as to have a chance of being selected to validate blocks of transactions and get rewarded for doing so. So there are no true POS blockchain networks right now, so the transition will inherently put all the assets on the Ethereum blockchain at risk. BTC doesn't face those risks, so there is no reason to acquire a riskier asset backed by Bitcoin when you can just acquire Bitcoin. And there's some more information there that you can go and read up in your own time. Remember, everything we discuss is linked down below in the description. If you're watching offline, please do feel free to use that as a resource. Now, here's something very interesting. For those of you who know about cryptocurrency sports books, we've now taken the liberty of making a list and reviewing the top 10 cryptocurrency sports books. So the explosion of cryptocurrency has wholly modernized and transformed online betting to the point where it is fast becoming the preferred sports betting currency. We have decided to highlight the advantages of these sports books and pick out top cryptocurrency sports books for you. So what are the advantages of cryptocurrency sports books versus something like a normal fiat-backed sports book? The most significant advantage that has people choosing cryptocurrency sports betting websites is the fact that blockchain is 100% secure and transparent. You can place a wide variety of bets anonymously, as well as have the peace of mind that you will get your payouts. Other factors that make cryptocurrency sports books the best option for sports betting is that there are little to no fees. Unlike a credit card or a debit card transaction, crypto transactions do not involve a third party for approval of a transaction, therefore cutting out the potential for a transaction to be blocked. And that is a problem because you can make a deposit, you use your funds, you try and make a withdrawal, your bank blocks that transaction, right? So what do? You can't do anything, right? So our top cryptocurrency sports books are right here. The link is down below in the description. Please go check it out in your free time. It's really intuitive, cool to watch, cool to read. And then finally, the last of the last, Revain, for those of you who remember, finally released their full-scale version 1.0 of the Revain platform. So Revain announces that the platform version 1.0 is out of beta testing and is now in a full-scale working version. Version 1, most significant changes include the platform's main page, blockchain implementation, AI, and authors incentive system. The Revain platform is completely blockchain-based. All reviews are stored in the blockchain and can't be manipulated by any third party in any way. And on Revain, projects and exchanges have an option to reward authors for high-quality reviews with tokens. We created RVN token for this purpose. Users can earn RVNs by writing well-reasoned, authentic reviews. So the custom algorithm ranks all projects and exchanges based on their popularity and people's impressions, which can help quickly understand the overall quality of the project. So the next milestones for them and their developers is to actually redesign the platform, the improvement of UI and UX, and author verification. So what is Revain, for those of you who don't know and have got this far and you're like really scratching your head like, I don't actually know what this guy's talking about. Revain was created to bring trustworthiness to online reviews using blockchain technology. The platform is bringing to life the service that will finally allow businesses to receive detailed and genuine feedback about their projects, while users will get access to other people's experience with RCOs and share their own insights as well. Let me know if you're using this. Please, I am interested to know. And finally, that is it, guys. That is the end of the Bitcoin Chaser News Live at 5. From myself, BroKaine, and Bitcoin Chaser, we wish you a lovely rest of your week. But please also do remember that there is now a new video section of Bitcoin Chaser where you can go view all of our videos, which include tutorials, past Live at 5s. Great place to come and get caught up on all things crypto if you've been away for a few weeks from our... And then finally, guys, happy 10-year anniversary for Bitcoin. Those of you who are following that and have heard about this, let me know if you did anything crazy today. Maybe you made a crazy video and you shared it because you were like, Bitcoin is now 10 years old. I don't know what I did when I was 10 years old, but it ain't nothing like Bitcoin. And on that note, guys, I'm going to love and leave you. See you next week. Bye-bye.